Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Surbhi Upadhyay and Pavitra Parekh. And the girls' markets are slipping a bit, right? In the red now for the Nifty as we speak. From the top of the trading session, the Nifty is now down 90 points. And that sell-off has just taken place in the last 30 minutes or so. Flat now for the benchmark indices. The Sensex 2 is just blinking red and green. For the week so far, the Nifty is down 2.2%, while the mid-cap index has relatively performed better. The mid-cap index is down 1.2%. The biggest drag is coming from the metal index. The Nifty metal index is down about 2.5% today. And for this week, the metal index is down more than 5%, almost inching towards that 5.5% knock. And that's where a majority of the selling pressure has come through. Hi, what are you tracking?
Hi, Reema. Yeah, I mean, I thought I'll talk about the winners, but then this market changes color so quickly and so dramatically. Actually, for what it's worth, I mean, banks have been trying to put some sort of a fight up. The Bank Nifty relatively doing better than the Nifty even as we speak. Actually, no, not anymore. The Bank Nifty is now slipping more than the Nifty. So things are changing very, very quickly. And this is where the bulk of the decline has come in from, because when the market opened up, the Bank Nifty was up, cruising around 0.5% higher or so. But nerves and, jitters pretty much back on. And now we are fighting around the 17,500 mark all over again. Pavitra, I was listening to Gautam Shah's commentary quite carefully in the morning, and I think some of the views on the street are still very, very bearish. People are watching for these levels because we're close to the budget day lows now, and a breach below that simply just triggers more selling. We're starting a new series, definitely not on a very optimistic note, because the market's not been able to hold any sort of the morning high whatsoever. What's on your radar?
Oh, absolutely. And like Reema was pointing out, the metals pack has been under pressure. This week alone, it's a 5% kind of cut. Take a look at some of the smaller companies as well. We've spoken about the larger ones, but take a look at some of the smaller mid-cap metal names. So something like a Nalco, you have NMDC, JSPL, all of these are seeing pretty sharp cuts. And this is what is really taking the index lower. The other big loser for this year, like we all know, has been the PSU Bank Index, right? Once again, a lot of those stocks are seeing some red. By the way, the PSU Bank Index in 2023 so far is down over 15%. This week it's down around 4.5% as well. So that's definitely the other big loser. You have many, like the likes of Bank of Baroda, Bank of India, Punjab and Sindh Bank is down 4%. These are just a few of the names, but there are cuts across the board over there. Today, what's doing well are some of the sectors which have been under pressure in the past few days. So real estate and pharma is what's coming up. Pharma, some of the larger names include the likes of Divi's, but you have smaller ones as well over there. And this is the real estate stocks which are doing well. DLF is up. Indiabuls Real Estate is up 9%. Oberoi Realty. So, I mean, of course, this space has also seen cuts right through the start of this year. But today, it's holding up fairly well. And some of the new age companies this week, for instance, Zomato has come up with a near 7% gain. You have PP Fintech, which is doing well today as well. So that is what we're watching in terms of the market action. But let's now talk about some individual stocks. DLF, like I was telling you, is in focus. There's also an ICICI Securities note. So Sonal is here with all of the highlights of that note. Sonal?
Thank you so much for that. Well, DLF has been on a launch spree, and this Feb itself, they launched a big project in Gurugram. That is what ICICI Securities is talking about. It is called Arbor, and it is at sector 63 at Gurugram. It is a total area which is being developed of 4.4 million square feet and has a potential sales value of 8,000 to 9,000 crore itself. Now remember, company had earlier guided they will be launching around 3.1 million square feet in fourth quarter of FY23. They have definitely surpassed that guidance as well. According to channel checks from ICICI Securities, it shows that there is significant buyer interest here as well. And company they might just look at selling the entire inventory at launch itself, or they might hold on to it in order to see whether they can take price hikes consecutively on this project sale as well. Quarter 4 FY23, they are assuming we'll see bookings of 5,000 to 6,000 crore rupees in this quarter, and the rest will be done in FY24, on the back of which ICICI Securities has gone ahead, raised their bookings estimates both for FY23 and FY24 by 17%, and have also raised the target price to 458 rupees versus 450 rupees per share earlier.
Okay. That's quite an interesting increase on the target there. But Sonal, before you go, what's troubling Mahindra Lifespaces? 4% down. There's a management change that's causing this?
Oh yes. In fact, the management of Mahindra Lifespaces spoke to us just 2 days back, and now there is a change. So the existing MD and CEO, Arvind Subramanian, he has resigned. This news came during market hours yesterday. They also said that the group has appointed Amit Kumar Sinha as the new MD and CEO. Amit Kumar Sinha, he has been working working with the group as the president of group strategy since April 2021, and he has been with the group for 18 years now. The company actually held a conference call yesterday post-market hours where they reiterated that there's nothing wrong with the fundamentals. The business will go on as usual. They spoke about their 2,500 crore booking target by FY25. They're ensuring continuity of key management across verticals and focusing on bigger markets like MMR, Bengaluru and Pune as well. They will also communicate long-term plans to the investors in due course of time. However, what worries the street is they declined to comment on the departure of Arvind Subramanian, and also that management transition comes at a time when the growth strategy was always in place. Since the time Arvind Subramanian has taken over, sales have been higher. In fact, in 9 months of FY23, sales were 22% higher than what we saw in FY22. They also won their first society redevelopment project in Mumbai with a sales potential of 500 crore rupees, and that has been the big trigger for most of the real estate developers in Mumbai itself. So this is something that could be worrying the street. The change in hands from an experienced person as well. However, ICICI Securities says that if growth plan is in place and the management is reiterating their long-term plans, there's nothing to worry. It's not a risk. So they continue to maintain their buy on the stock.
Thank you very much for that. Let's talk about Zomato, and this is higher in trade following the pilot launch of its home-style meal services. Mangalam is here with the details. Mangalam.
Well, it is a pilot launch of home-style meal services, like you said. It is basically called Zomato Every Day, where they will sell and deliver home-style meals at 89 rupees per meal. This is a plan which, they've replaced the earlier pilot plan with, which was basically Zomato Instant, which was 10-minute delivery, which they had started in about 4 units in the north of India itself. And they believed that that wasn't doing as well. So this is something that they would try and see if that works or not. But from a business standpoint, this makes more sense because one, this increases order frequency, and at the same time, it does not have concerns with regards to the quality or the assortment that there is, because at 89 rupees with no time limit, so to say, on a daily basis, if someone can deliver home food, then there I'm sure would be a fair amount of takers for that. But then again, this is a pilot, so let's see how this goes.
All right, Mangalam, thanks a lot for bringing us the details there. With that, let's also bring you some important corporate commentary. TDK Prestige Chairman TT Jagannathan told us this morning that the company is closing in on a potential acquisition. The size is, likely to be upwards of 500 crore rupees. He also, however, did raise a red flag on the domestic growth, saying that the rural market has actually slowed down considerably. So let's listen in to some of those comments.
We are trying to shift volume from the domestic to export because domestic is slowing down.
Yeah. Okay. I want to talk a little bit more about this domestic slowdown, because in the context of you adding capacity in Gujarat, what would this mean? A, what would your total capacity rise to? And once the whole capacity comes on stream, what will that help in, do to your revenues?
We've added capacity in different areas. We've added capacity in non-stick cookware, in roller coated cookware, in stainless steel cookware, hot anodized cookware, various different businesses we've added capacity. So I can't tell you what percentage, but it'll add about 500 crores to the top line if we use it fully.
You said that the entire pressure cooker category has slowed down. And of course, you can't compare it to, the COVID levels, because that was a different consumer pattern. But now that, COVID is behind us, do you think the slowdown is temporary, or do you think it could be a little more long drawn?
My view is that it's temporary. You see, the rural market is penetration is almost zero. And with induction and gas going to the rural market, they'll have to start buying pressure cookers. I believe it's a huge growth story in pressure cookers.
Mr. Jagannathan, you've been in the market. At times you've said that maybe inorganic growth is something that you could look at. Are you scouting for something as of now? Should we hear something?
I'm afraid I can't talk about it at all.
But are you on the, we don't want a timeline, but are you still on the prowl?
We're on the prowl, yes. In fact, we're almost nearing destination.
Sorry, we are almost?
Nearing destination.
Oh, wow, that'll be interesting. Okay, so then let's push it a little bit more. By the first quarter...
No. No more.
Okay, what could be the rough size, Mr. Jagannathan? What could be the rough size?
What could be the?
Rough size. The destination, what could the size be? 500 crores, 200 crores, 300 crores, what could it be?
About 500 crores.
About 500 crores. And the cash in your books is?
850 crores.
All right, so you could fund it from that. Interesting.
And are you looking at this calendar year itself?
we're low hoping for that, yes.
Okay, so that was TTK Prestige, Mr. Jagannathan there, pretty much saying that they're closing in. They're nearing the destination, so to speak, when it comes to that acquisition. Stocks holding up quite well in trade today. Let's take a quick break on that note. We'll